The two most dependable investments in the past have been gold and real estate. Owning a home seems out of reach, even with today's high prices. In the past, landlords have been the social elite, and most people have only dreamed of owning real estate. But over the past few hundred years, the financial system has changed so much that it now gives people a new way to get rich. Warren Buffett is living proof that if you choose wise long-term investments, you can succeed in the stock market. Which investment is preferable will be looked into. Is real estate investing still a wise choice? Is the stock market a better alternative in the 21st century? Welcome to Financial Fluence. In this video, we'll talk about the difference between investing in the stock market and real estate, and where the rich people invest their money. Let's now get going. Number 1. Real estate versus the stock market. Unlike stock market experts, real estate investors believe that real estate is the best investment of all time. The truth is somewhere in the middle. Both are partially correct. We must, however, carefully examine each one to determine its precise location. Let us begin by acknowledging that real estate is expensive everywhere. People often spend their whole lives trying to get one piece of property, like your parents probably did. Savings are required for one real estate investment. However, you can begin investing in the stock market with as little as $5. Of course, it depends on the stock, but the majority of companies, including behemoths like Apple, trade at around $300 per share. For as little as a few $100s, you can become an investor in one of the world's largest corporations. Unlike in the past, however, when you had to pay a broker, you can now buy stocks for free using apps like Robinhood. The transaction fee for real estate is, however, quite expensive. That is not to say that the stock market is automatically doing better. Stock market investing involves noticeably higher risks. Market analysis, and particular stock analysis, can be challenging. The market will probably be overvalued after the expansion phase. If you don't sell it before the market crashes, it's likely that your investment will lose 20, 30, or 40% of its value. If history has taught us anything, it is that nothing is too big to fail. For instance, both Apple and Nokia once had sizable businesses. In truth, Apple had previously been on the verge of bankruptcy. A wide variety of factors affect the daily changes in stock prices. Even if you have been investing for a long time, you might have an emotional reaction that makes you sell at a loss. But when it comes to real estate, things are different. As long as it is located in a city, the land beneath it will always be valuable. They frequently quickly regain their value, even in times of crisis, because everyone needs a roof over their head. Real estate meets a basic need. You can rest assured that if you purchase a property, you will not wake up one morning to find that your asset has lost half of its value. Real estate is appealing because it generates passive income. Renting is one of the few investments that can provide you with a strong, stable income with a dividend yield of 7, 8, or even 10%, while not requiring you to work. While any company paying a dividend yield of 5% or higher is extremely rare, even if some companies pay, the investments are risky and could result in much larger losses. If the price falls, you may be able to profit from dividends. The inverse, however, is also true. Real estate prices do not rise in lockstep with stock market prices. In 2019, home prices increased by an average of 3.8%, compared to a 28% increase in the S&P 500. Over the last 10 years, Netflix has outperformed Amazon by a factor of 3, with a total rate of return of 3,767%. Because companies on the stock market will have to keep coming up with new ideas to stay competitive, real estate will never offer such returns. In just 25 years, Amazon has gone from nothing to a $1 trillion company. Whatever the business world throws at you, if you are at the top today, your competitors will overtake you tomorrow. This is not like real estate, where you can sit in a corner and earn a monthly passive income. There are two approaches to tax management. Even if the stock price increases by 1,000,000%, your wealth will only increase on paper. To access your wealth, you must sell the stock. Doing so will result in a capital gain tax of 20% for long-term investments, and a maximum tax of 37% for short-term trades. There are numerous ways to avoid paying real estate taxes and utilize that money to build wealth. You can deduct the portion of your mortgage that is related to interest payments on your tax returns, rather than pay for the property outright. You can recoup the cost of an investment property through depreciation. Even if a rental property generates a positive cash flow, depreciation costs almost always result in a net loss. This loss, combined with other expenses such as utilities and insurance, reduces normal income. Even if you buy and then sell your home, you can avoid paying capital gains tax. Real estate can also provide tax advantages. Of course, not every day is filled with rainbows and sunshine. Real estate requires a lot more effort than stocks, where you can read the company's financial statements, do some research, and decide if it's worth your money. It could take weeks or even months to find a suitable rental property. That is not the entire story. Finding good tenants who will pay the rent and take care of the property is just one of the challenges you will face when you begin renting it out. The house requires regular maintenance. Things break and need to be replaced. There will be no decrease in costs or expenses. Furthermore, because your property may require you to be present at all times, moving to a new city or country may be difficult for you. When it comes to investing in the stock market, however, none of these issues exist. You can go wherever you want. You can easily keep up with the news and the performance of your portfolio from the comfort of your smartphone. And before we continue, don't forget to subscribe to the channel. Hit the like button and turn on the notification bell to be notified every time a new video is uploaded. And let's continue. Number 2, stock market, endless opportunities. The stock market can teach you more about business than a 4-year bachelor's degree, which is something I like about it. Before you invest in a company, you should read its financial statements, understand its cash flow, look into its history to better understand how it makes decisions today, and learn about its products and sales. Additionally, you need to have a solid understanding of how the economy functions, including the part that banks play in economic cycles. So, if you ever want to start a business, this information will be the most important thing you know. The stock market, however, is more than just buying and selling stocks. Because of the complexities of the financial system, there are more ways to profit from the stock market than most people realize, including shorting, which involves selling a stock for a profit and then buying it back at a loss. You can also profit by forecasting crude oil prices using futures and options. We can't cover everything in this video, but the point is that mastering the stock market will open up a world of opportunities in front of you. Number 3, leverage. A stock is essentially a digital document the size of a smartphone screen that you buy. You have almost no control over it because the company has 5 billion other shares, and your one will not give you much influence. Due to the fact that you can see, touch, and feel real estate, you have complete control over your investment. Number 4, where should you invest? What should you do with your money right away? If you want to make more money, you should definitely invest in the stock market, especially if you are a new investor with little money to start with. Real estate investing is still the best way to generate passive income. But keep your own self-interest in mind. It may not be for you if you find it tedious to research companies and wade through mountains of paperwork. Your home address, among other things, is very important. Your country or city may have different laws or customs. As a result, you must make your own decision based on the facts of your specific situation. And that's all. I hope you enjoyed this video. If you enjoy similar stuff, check out my other videos. And if you like it, hit the like button, subscribe to the channel, and turn on the notification bell. And I'll see you in the next video.